Hi, you are watching ET Markets Live. I'm Neha Vashisht Mahajan. Welcome to a brand new episode of ET Market Wrap, your go-to show for everything market related. Joining us now on the ET Market Wrap is Kranti Batini, equity strategist at Wealth Mills Securities. Thank you so much, Mr. Kranti, for taking out time and joining us today on ET Markets Live.
Thank you, Neha. Thank you for inviting me on your show. It's always my pleasure and privilege to share my market views with you and with all the viewers of ET Markets.
Well, the pleasure is all mine. So, all right, let's start with the first thing. Let's talk about what happened in the markets this week. So, the markets were on a roller coaster this week as well, mainly driven by easing global tensions, profit booking, and underwhelming Q4 earnings. Now, FIIs also played a major role. Can you break it down what really happened this week in the markets?
Yeah, absolutely, Neha. You are absolutely correct. Markets are in a roller coaster ride. They're completely in a range bound at this point of time. One thing is what we can sense at this point of time in the markets is the upside is capped around 25,500, and also the downside also seems to be capped around 24,750 range. Okay, this is the level
Hmm.
markets are currently swinging around in this range. Uh, we have not witnessed any kind of a great booster kind of a uh, earning results, especially because we are in the fag end of the earning season. The
Yeah.
only earning of the company in the large cap space is concerned. LIC, definitely the results are better than the previous quarters. Okay, so, the
Hmm.
guidance also quite positive. So LIC, we have witnessed breakout in LIC. If LIC could able to sustain at 1,000 levels, we can see some kind of a
Hmm.
momentum in LIC. But by and large, this is a week for mid and small cap stocks, where uh,
Okay.
by and large the entire focus is mid and small cap stocks. But by and large, we have not witnessed any kind of negative surprises. At the same point of time,
Hmm.
we have not witnessed any kind of a negative positive surprises on upside. By and large,
Okay.
to sum up the entire the Q4 earnings, Neha,
Hmm.
this is a decent quarter, okay, better than the expected. And on
Hmm.
a year on year, if we compare, there is a kind of a uh, earnings expansions we are witnessing. So
Hmm.
it's a quarter. There are no negative surprises. That's what because a lot of global uncertainty in terms of the trade, in terms of the geopolitical issues. So weighing all these things,
Hmm.
okay, it's a decent quarter. And what I believe in the coming quarters or coming years, okay, there can be earnings expansion. That's what we can expect from Indian markets. Coming to straight away to your point, of course, it is a roller coaster kind of a week we had. The foreign portfolio investors have been buying on Indian markets very selectively. But one
Hmm.
advantage India is gaining at this point of time, Neha, if we had many shows every week, we used to discuss the way the FPI flows used to go out of India to US markets. Right now, India is one of the favored market for the foreign portfolio investors at this point of time. And the narrative of investing in US is
Hmm.
more every day the uncertainty is going up, but the narrative
Yeah.
of investing in India, the clarity is emerging on Indian markets, despite of the way we had also had a very severe
Hmm.
geopolitical issues. What we witnessed, the tension in
Yeah.
on borders and all we witnessed, but the way Indian
Hmm.
administration handled is a complete a signal and a message to the global investors that India can handle these kind of a geopolitical escalations also in a better matured way. So it gives a lot of
Right.
comfort to the foreign investors while making any serious investment decisions on India. So by and large,
Hmm.
uh, we are with a positive bias at this point of time, even though some kind of consolidation is inevitable. Now, we can't expect the
Hmm.
market to go up every week since we discuss on a
Right.
weekly
Right. Right.
basis. Sometimes,
Yeah.
okay, there will be a periods where markets will take some kind of a tiredness markets get into, and
Hmm.
markets
Hmm. Hmm.
also need some kind of relaxation. That's what is called consolidation.
Absolutely. So, would you say that our Indian companies, our domestic section was resilient and strong enough to, go through all the geopolitical trauma and everything, including our issues with the Pakistan also added in the middle? Would you say that our domestics are strong right now? So that's why even after having like subdued Q4 results, we are still standing strong?
Absolutely, Neha. The domestic macros are quite positive for India, and the growth factors, and also the current macros what we are getting. The inflation
Mm.
is cooling off, and we had a
Yeah.
early monsoon. We can expect the monsoon to be good this year. And the other thing to cheer it up on the Indian markets is uh, the current optimism on Indian markets. That's where
Mm.
India is gaining the points in the medium to short term also.
Right.
That's what giving the comfort to the global investors.
All right. Let's also talk about some sectors. Which sectors do you think stood out positively this week and which ones lagged
Yeah, by and
and why?
large, yeah, by and large, defense seems to be there is a lot of euphoria and exuberance is
Mm.
going up with respect to the defense sector is concerned. It seems to be a standout sector after these geopolitical tensions erupted. Everybody started about investing in defense. Of course, on our show, we have been kept on telling the investors when the valuations were very attractive. I can say mouth-watering. We have been telling
Mm.
on your show, defense is one of the theme. Everybody need to keep on their watch list, and that's what. But Neha, with or without these geopolitical escalations, okay, the sector
Mm.
is expected to do well. That's what we are expecting. We are witnessing on defense. So some kind of whenever there is a lot of euphoria and exuberance that takes place in one
Mm.
sector, too much money chases very too little stocks. Okay, that's what we are witnessing in defense. So some kind of froth also can be there. Okay, if anyone in the medium to short term, if they want to take some profit from the table, they can take. There is
Mm.
nothing wrong taking profit from the table in the defense sector at this point of time. But this is a sector to watch out. Any dip on Indian
Mm.
markets, especially on defense stocks, it's a warranted by one can accumulate for medium to longer term. There is a strong earning visibility, and also the order book and the
Yeah.
execution will take a faster pace going ahead. That's where the
Mm.
revenues get translated. This is a sector to
Right.
watch out. And banking and financial services sector, this is also one need to keep on their watch list. And when the
Mm.
entire globe, this answer is to your previous question. I missed it to answer. When the
Mm.
entire world, why India is a favorite sector for the foreign portfolio investors? Uh,
Mm.
when the
Mm.
entire world, the US, there is a lot of uncertainty with respect to the Federal Reserve rate is concerned. Yesterday night, Trump met Jerome Powell. I don't know. I have not checked what is the outcome of their conversation because I had a last night late flight. I missed to
Mm.
check the details. But
Yeah.
there is a lot of uncertainty and ambiguity with respect to US policy making is concerned. Whereas in India, we
Mm.
have a greater clarity. We have a consensus that we'd be getting next two rate cuts. Okay, which is going to favor the banking and financial services, and IT selective buying is taking place. IT by and large, it is in a lot of uncertainty
Mm.
is there with respect to IT as a sector is concerned. Pharma also a little bit
Okay.
subdued this week. Uh, Domestic centric sectors like engineering, construction, infrastructure. Okay, these are the sectors. There is a kind of a selective buying what we witnessed in these sectors. So by and large, what we can sense at this point of time is it is a very stock specific move rather than the sector specific
Okay.
move this week.
Okay, so one more follow-up question on banking and also NBFCs. What's your view on the performance of banks and NBFCs in the current market context?
Yeah, banks are performing well. They are coming out of the woods. We can see some kind of a positive performance on a medium to longer term perspective also. Any dip on
mm,
Indian banking stocks, one can add, but IndusInd, the news that came, it definitely
yeah,
creates some kind of a indelible mark on the corporate governance of banks like IndusInd. Uh, uh,
mm,
but the way how they are going to handle this kind of a situation, bank like IndusInd Bank, uh, they need to improve their corporate governance, and so it's a indication to other banks also what kind of corporate governance
mm,
level the banks have, and banks are favored by the foreign portfolio investors. They are much interested
yeah,
on Indian banking franchises because banks are considered as the center of growth for any economy, and also these
mm,
are the strong franchises of growth in India. Uh, that is the reason foreign portfolio investors always tend to have some kind of a favoritism towards Indian banking sector. Uh,
right.
investors with a medium to long term, given the kind of clarity we have, the banks NIMs are expected to go up if we get some kind of a rate cuts. If the rate cut cycle is going to continue, banks are are the sector to be most favored going ahead. And coming to your point, NBFCs, they are just
Mm,
because of the new recent norms of RBI, some kind of impact on their earnings. But I'm sure once the rate cut cycle comes, the liquidity releases and the growth takes place, and the credit growth momentum is going to go up. So
mm.
NBFCs also, selective NBFCs also, one need to keep on their radar.
All right. Let's also talk about strategy for next week. What should investors do for the coming week in terms of strategy right now?
The current strategy, Neha, what we are observing from the past 3 to 6 months time is markets are in a range bound.
Mm,
We
mm,
witnessed the pendulum of the market, the euphoria of the market, the VIX of the market is moving towards extreme pessimism, one hand, and
mm,
the another week we are moving towards the extreme optimism. That's what we
right.
are witnessing. So to handle these kind of situation, investors or traders, one need to have a strict trailing stop losses, and if they are buying any stock for a medium to short term, if they're buying at 100 rupees, if there is a sudden spot in the markets, because when the pendulum
Mm,
moves towards the extreme exuberance, okay, it goes to 120, 110. Okay, uh, look look back, is there any fundamental change in that stock because of the movement in this particular stock? If there is no fundamental change in that particular company, it's just happened because of the euphoria and the liquidity of the market, uh,
mm,
better book profit, or else the next week when the pendulum shift to extreme pessimism, the same stock what we bought at 100, it is available at 90. So you might be thinking and looking at what happened last week. We are up by 10%, now we are at down by 10%. So that's what
mm,
the narrow range market is. So so definitely this is a market buy on dips and sell on rally kind of a market what we are witnessing
mm,
at this point of time, until unless we decisively closes above 26,000 level of Nifty, the markets are
mm.
expected to be in a range bound in the medium to short term.
All right. Let's also talk about some key triggers that investors and we all need to keep an eye on in the coming near term. What are the data sets that are going to affect the markets in the near term?
The first and foremost is how the monsoon is going to forecast, because we had a
Mm,
early monsoon. Okay, sometimes the rain guards have a tendency to surprise. Okay, so this is the extremely crucial at this point of time. We tend to ignore
mm,
that fact, but monsoon also plays very important role in the dynamics of economic dynamics of India is concerned. So that's where one need to have, and the one other data factor is the U.S. administration. One
mm,
week they say yes, the other week they say no, and they will change their stance. Okay, so that has been changing the narrative in the markets. So that
mm,
is not in the hands of you and me. So how the US policy making things are going to be, that's extremely crucial, because what we witnessed is they imposed tariffs on European Union. One week they said we are differing. Okay, when they announced, markets are tumbled. When they said we are differing, okay, markets are
mm,
rejoicing. So a lot of uncertainty is getting created now. Uh,
Right.
I know it's not easy for a retail investors to track all these data points and a
Hmm.
lot of uncertainty. We prepare for no, and what's going to come is S, and we prepare for
Yeah.
S, and it's turning out to be no. So that is the reason you mentioned rightly. We are in a roller coaster kind of a markets
Right.
at this
Right.
point of time.
Right, absolutely. So we have reached the last leg of our session where we are going to discuss Nifty levels. What are the critical support and resistance levels that you're watching for Nifty?
The first and foremost level is on the downside. Uh, Nifty has been holding 24,750 levels. If
Hmm.
market could able to hold this level, we can see the positivity in the market to continue, and Nifty try to attempt 25,000. If Nifty could able to sustain above next week 25,000 level, we can see some kind
Hmm.
of a positive momentum we can see in the market. But if in the next coming week, by because of any uncertainty that comes from
Hmm.
US policy making and all, if the Nifty drifts below 24,750, we can see some kind of a downside in the market. So these are the crucial
Okay.
levels one need to keep on their watch list when executing the trade. But definitely, if Nifty breaks 24,750 level also, my belief is okay, there can be pullbacks because the liquidity is quite strong in the market. One hand, we're getting the support from DIS, we're getting the support from foreign portfolio investors. By and large, the bandwagon of retail, they are not giving any chance for the uh, bears to take control. So by and large,
Hmm.
it's a liquidity led. Liquidity is quite strong. So definitely there will be pullbacks. Any dip on Indian markets is a warranted buy, Neha.
All right. So we've reached the end of our segment for today. Thank you so much, Mr. Kranti, for taking out time and joining us today on ET Markets Live. It was a pleasure talking to you.
Thank you, Neha. Always my pleasure to share my views with you and with all the viewers. Thank you.
Thank you so much. Thank you, everyone, for joining us.